Good morning, everyone, and welcome to the Quantum Leap Morning Leap. This is our pre-market trade plan setup for Thursday, January the 21st, 2016. My name is Doug McKay. I'm the founder and head moderator of Quantum Leap. Each morning we come together in these live sessions to take a look at the market. We look at a macro and a micro view, and then we drill down to our trade levels, our targets, and our hypotheses for the day. If you'd like to come in for a free trial, we do offer a free trial. It is a subscription service. We do these live sessions during the morning, and then we do the live trading during the day. I'll put up my contact information in just 1 minute. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. See how we hit the 64, gang? Right down to 64 and a quarter. I should have held on that short from 72. Here's my contact information. Just give me an email at quantumleapfutures@gmail.com. There's no website. This is not a commercial venture. Or just give me a call or contact me on Skype. Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And if you want to see more of these videos, there's lots of them on YouTube, probably plus 300 days on YouTube. Just do a search for Quantum Leap Futures. And if you like what I do, please follow me on Twitter at Crazy2. Okay, so yesterday we were looking for two things. We were using the 32 as a defining line on whether or not, well, actually we were using the 48.75 first, but we were looking at that warning line that we had in at 34.75 and then the 32. And I said if we got below 32, we'd take out the overnight low, but we'd likely go down. And our main target, okay, was that 18.11.75, just 2 ticks in front of the naked microcomposite VPOC and the VPOC. Of course, we did break the 32, and we went all the way down to this low at 18.04 and a quarter. This low is a weak low, so even though we're up trading in the 64, 63 area right now, we may not hit it today, but this is a weak low, so this will not hold. It might hold for a bit, but it's not going to hold. And then we rallied. We had this huge rally all the way back up. I mean, we had off the bottom, we had, close to a 60-point reversal. It was just incredible. And then we sold off from basically from the daily ATR upside target and that LVN that we were looking at, and came back down. Tested the developing value area high a couple times, and then we closed at 54.75. Yesterday's full session range 74 and a quarter, RTH session 65. It was a great day, absolutely great trading day, and I didn't even trade it that well, but I still made a lot of money. So let's start with our news. We had news this morning. Philly Fed came out better than anticipated. ECB came out as anticipated. They did say that that they were looking at the possibility of rethinking their monetary policy in the next quarter, and we did have unemployment claims at 293. Now we had an initial spike. I shorted the 72 and a quarter, and had to hold it up into the 74 and a quarter. But with the big miss in the unemployment claims, I was pretty sure we were going to come back down into the 64 area. We're actually now trading 60.50, so I didn't hold that long. The problem is I can't trade and do these pre-market sessions, so I ended up taking my runner off at 68. At 10 o'clock, we've got consumer confidence, natural gas at 10:30, and then we've got crude at 11. Crude will be the big next one that we'll be looking for that could move the market. Crude has been very, very weak lately. I always like to just take a look at the macro to the micro. As you know, I use a candlestick chart, basic candlestick chart, and a 9 EMA and a 20 SMA. And I'm simply looking for slope and separation and where the trend is being violated. And on the monthly, you can see we had this beautiful trend. We are violated here on the monthly and possible start of a downward trend. Sorry, on the week. The week continues to get weaker and build this technical gap greater. So it'll be interesting to see what we see today. We still got today and tomorrow. The week open is at 69.75. So we're not going to get critical mass this week. At least not right now where we're trading, because it could turn out to be a doji week or a slightly positive week. Let me just get rid of this open study here. But the trend itself on the weekly is down. On the daily, great big huge foo-bar. Now price has been paralleling the 9 really nicely, but we're getting some some serious downward slope right now. Today so far in the full session we do have a inside bar, and I say that so far because if we break that high yesterday at 78.50 that we put in the Globex, that was it 78.50? Yeah, 78.50. We should, we could break that, so it won't be a foo-bar Mr. Sneaky. But this is a foo-bar right now, and this could turn out to be a Mr. Sneaky. So we want to pay attention to this in the next couple of days, based on the patterns parameter in the time frame. So it is a daily foo-bar Mr. Sneaky setting up, but it's not completed, and we'll have to trade it based on the day, not the intraday. On the intraday, you can see that this trend is being challenged as we come down here. Each time we fail to hold above the 20 SMA. So we're in between the 20 and the 9 right now, and we're getting some consolidation right now. And we just have to wait to see if we break above or below the 20 or the 9, and whether or not we're going to get continuation or change of the trend. We do have this move up and then challenge, and now we're breaking back above. But again, we've got a possible foo-bar Mr. Sneaky tech gap on the 1 hour. But it looks like they're trying to start an upward trend here. Going to the 30-minute. 30-minute, same thing, another foo-bar, tech gap, Mr. Sneaky so far. But again, these patterns on the 1 hour and the 30-minute are not complete yet. We do have a naked cross on the 30-minute at 1850. I'd mark that down in your journals. 1850.50. But right now we get a possibility of a start of an upward trend. Going to the 15-minute, same thing, foo-bar, Mr. Sneaky, and probably come down and close this tech gap in around the 58, 57 area. But we do have slope and separation starting to the upside, so if we could come down and bounce off of this 9 EMA. But that is another foo-bar, Mr. Sneaky. We're going to see that off the news, of course. And then on the 5-minute, we created the tech gap. Didn't quite get a foo-bar, Mr. Sneaky, because this is a double low 66.50, low 66.50. So not quite a foo-bar, Mr. Sneaky, but did close the technical gap. We're below the 9 right now. So we're losing some slope and some separation, but we do not violate the trend until we get below that 57.50 area. So let's take a look at the big structure. So we're trying to hold value here in around the 15, 16 area where we had that prior microcomposite VPOC. They couldn't. They tried to hold it here at 86 and a quarter. They came down, found value at the 72 area, and then rallied back up, tried to hold it here. And then, of course, we gapped down yesterday and fell out and got below that 48.75, our key line in the sand for the last week. And we came all the way down, broke through that second key line in the sand, and came down to the 1811 area and found buyers, and then rallied ourselves all the way back up. So we're trading right now at 59.75. We do have that key line of sand. 48.75 is going to be our key line in the sand again. It's going to be more of a warning sign for us today, because the possibility of coming back and testing the 35. The naked VPOC is 35.50. We've got this 35.75. So, and then we've got the gap close. Our gap closes at 54. So 48.75 is going to be a warning, but I'm expecting a rotational day here, and we could test both sides of this 48.75. The real line to pay attention to is the same one as we were yesterday, is watching this 32 level. If we get below the 32 level, then I think we're going to get, a grind down here, and we get stuck in the wicks. I'm expecting to either get stuck in these wicks right here between the 48 and the 70, or get stuck in the wicks between 48.75 and the 18 area. I don't think we're going to get as big a movement. We had a big gap and go day yesterday. Now they've got to auction the territory that they traveled through. Price discovery yesterday. So I am looking at a rotational day, either up here or down here. If we get below 1800s, did a little bit more work on the longer term back here. I did some work last night and got some new targets. Not really new, but more defined. The next big target below, if we get back into the 1800s, of course, is going to be the value area low down here. First target will be 95, but the next big target will be the 73 and a quarter, which is the value area low that centers around this 1811 and a quarter VPOC. And then if we don't hold that 73, 74 level, the next big destination is down here at the 1765. And this is where they found the buyers when they got down here the last time to start this big rally up. So I'll be watching that at 65 and then 53. And then the next one below is all the way down here in the 1730 area. And I know we were talking about the 1732 area before. We've got some gaps down here. I know Marvin's got some targets on radar down here, so we have to look at that. To the upside, of course, if we hold the 48, I'd be gunning for, well, the first target would be 62, but then I'd be looking for the 67 and a quarter. And if we can get above the 70, then we could get a greater move up, and we could turn into a trend move back up. I'd be looking for 72. The gap closed there at 73.75, and then possibly even up into the 78 to 86. I'm not expecting that today. I'm expecting a grind in this area, and we'll probably see both sides of this 48.75. That's why I'm saying it's not really a line in the sand today, the 48.75, because I think we're going to breach it. But it is a warning line. If we don't break it and don't test below it and start grinding, and we break out of value and range, then we could get a bigger move up. If we get below it, I think we'll push down to test the 32. Take out that naked VPOC at 35.50. But if we break 32, then I think we're going to travel further down to test the low 1800s. Maybe break the 1800. I don't know. I think that the buying was pretty strong. It is a weak low, but this is a fairly decent buying tail as well. So put it into context in terms of, yes, we put a weak low in structurally, but we also had a very solid buying tail on the daily. So we'll see. Trade the levels. Okay, so let's get these levels going. All right, so our overnight high is up at 76. Our overnight low is at 36 and a quarter. Okay, based on the overnight high and the overnight low, our 20-day ATR is running at 41.73. Pay attention, that is increasing, not decreasing. Right now, our ATRs are expanding. And our downside ATR target is down here at 33.75 based off the overnight high of 76. And our daily upside target is up at 78 based on the overnight low of 36 and a quarter. Interesting thing to note that our weekly ATR dropped with that move down to the 1804 and a quarter. Our weekly ATR is 74.14. Based on that lower low, our weekly ATR target now is actually 78.50. It's just, I wanted to have it here so you can see it. So basically, our daily ATR target and our weekly ATR target with 1 day to go are both basically sitting in the 78s. We're currently trading 58. Our overnight VPOC I don't think has changed. It's still down at 46, although it could shift here before we're done to the 60 level. So if anybody sees this shift, let me know. But I'm going to go put it down here where it is right now at 46. Our floor pivot is 45. And we're in the upper distribution of yesterday's trend day. Our open yesterday was at the 45 level. Our value area high is 58. So I'm gonna have there's a little LVN here, right here at the 58 and a quarter, and it's right here at 57 and a quarter. So I'm going to put a trade area right here, which basically is going to encompass those two. I want to be above 58 and a quarter to stay long. I want to get short below 57 and a quarter into the naked close at 54.75. That's going to be our first target below. And then below that, we've got the value area high and the closing swing low at 48 and 48.75. It's going to be another trade area. And then below that, we've got the daily pivot and the VPOC and the open from the prior day at 44.75. That's going to be our net target below inside, right if we get inside a range. And there's really nothing I need here now, so I can get rid of this and expand this out. Of course, that 48.75 warning line is right at the value area high, so I'm going to change this to our warning line. I'm going to just call it a warning line for trip through value, because I think that if we do get inside of the prior day value, the value area low is all the way down here at 1814. So we could see a trip through value. This will definitely be a trading area that I'll be looking at. Of course, the the target inside of the 48 is going to be the floor pivots. There is all this confluence down here between 33 and 36. We've got the overnight low at 36 and a quarter. We've got the CHVN at 35.75, the naked VPOC at 35.50, and then we've got the VWAP down here and the daily ATR target basically sitting down here at the 33.75, 33.50 area. So that's going to be the main target if we get below that 48 value area and gets inside of value. Below that, got a little bit of support coming in at the 29 area. And then if we get below 29, we've got this lower distribution here, which is pretty blunt. But the one I'd be paying attention to would be the 24.75 and the 18. You could probably front run it right here at the 20 and a quarter. That's probably better. And then below 14, I think we take out. Then we get below the value. We've traveled through value. I do not think if we get below. In fact, I'd be betting pretty strongly that if we get through the 1814, that we'll take out that weak low that we put in. But I'll be targeting, of course, the 11 and a quarter. Actually, I'm going to use 10.75 as my first target. The 750 as my second target. And then anything below the 1804, I think we go down and break 1800. And I'm looking for the first target down here at 1795. 1790, the 83 and a quarter, and then the next big target below is going to be all the way down here at the 1765 and a quarter, with some initial targets, but this is going to be the next big target below in the 1700s. And I don't think we're going to get there today, so we don't have to go much further than that. Well, let's just get them in so that we've got them. 76.50 and then 1744.75. Maybe the next big support level. We really don't have a lot below there, so I'm not going to bother trying to define that until we get something more definable. All right, so above the 48, we've got the 57.75 LVN overnight, and the LVN from yesterday, in between that 57.50 and 58.50, and then the first real target. There's really not much until we get up into the 62. And then above 62, 67 and a quarter. Above that 48 level, you really want to be focusing on the long side. 67 and a quarter. And then, of course, we've got the 69 and a quarter high, which is basically just below the 70. So I'm going to incorporate the 70 CLVN, and then you got a nice target up at the 72, 75. naked close at 73.75, naked VPOC at 74, and the overnight high. Now this is going to be a fairly decent trade above the 70 level into these upside targets, all the way up into the 78. 81 will be resistance, the first resistance that I'd be looking for, the value area low from that 2-day microcomposite. And then above 81, I'd be looking for 86.75. 91 is going to be our key line, and 91 is going to be our key line in the sand above. I just don't think we're going to get there. I mean, you could say, you could actually use 70, but, you know, we may just pop up, take out the overnight high, reject the 78 area, and then come back down. So, I mean, this would be your warning line for the possibility of a trend day, but I don't think it really gets into a trend day until we get above the 91 level. So those are my levels that I'm looking at. Let's take a look at the, oh, when did I do that? It's not. Taking a look at the Keltner, we're currently above the Keltner center line in the 24-hour VWAP. VPOC did shift, so I'm going to move that VPOC from 45. 46, I should say, and it shifted up to the 60. Upper Keltner sitting at 63.50 right now. The value area high overnight 24 hours is 65.50. If we get below the 58, we've got the 56.25, and then the lower Keltner is going to take us down to 52.25. But I think by the time we get there, it'll actually be in around that 48.75, 48 level. Take a look, quick look at gold. We're running out of time here. I know I started late. Gold has come off on the news. It's broken below the 1100 again. If they break 1100, I'll look for another long into that, into the balance, into 1102, and hopefully get another run. I'm glad I did take my profit off. I left $5.50 on the table from that move to 990 yesterday. If we can't hold, if we can't break back above 1100, look for them to come back down into the 95 again. And you know, if they don't hold the 95, I'd be looking for a push down into the 86, 87 level. And if we break 87 level, then I think you know, we're going to have to come down, back down into the 72, maybe the 77, 78 area again. I don't think it's going to be a good day to trade gold today, personally, but the only trade I'll probably take is if I see a breakout above 1100 and the indices start to go down and test the lower levels from yesterday. Anyway, that's going to be a completion of our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.